Hey friends, welcome to The Smattering. I'm Jason Hall. I'm solo today. We got breaking news. Wanted to get this out to you as quickly as we could. One of my favorites, real estate investments, one of my favorite stocks, quite frankly, is up big today. Shares of Store Capital, ticker STOR, are up over 20% today. We're going to talk about what's going on. But before we talk about what's going on, just want to give a hat tip to our friends over at The Motley Fool. Thanks for sponsoring this video. If you're looking for the 10 best stocks to buy right now, go to my link, fool.com/The Smattering. Put in some information. You'll get a special report with the 10 best stocks to buy right now. All right, let's get on to the story here. So what is going on with Store Capital? It's being acquired. That's the short version, the short answer, and I'm going to give you a little more detail on it. GIC and Oak Street are going to pay $14 billion to buy the company. What is that worth to you and me? If you own shares, $32.25 per share. Now, there's a little more to the story. Here we look back at the stock price. The stock price is $32.20. It is 10:30 a.m. on the 15th of September. The deal was announced today. Okay, you might be thinking, all right, well, that makes sense. They're paying $32.25 a share. $32.20 a share, it's basically trading for about the deal price. That's not normal. It's not typical for a stock to trade for almost the deal price right when the deal is announced. Usually there's a little bit of a discount, okay? A couple reasons why. Number one, deals have to get approved. You have regulators, you have shareholders, all of those things that have to happen before the deal happens. And you have time, right? So there's the time value of money. So usually it's not uncommon for a stock to trade 3 to 5% discount to that deal, and then the price gradually move higher as it gets closer and closer to it. In extreme situations, sometimes there can be a significant discount, like Activision Blizzard, as an example, is trading at a substantial discount to the price that Microsoft has agreed to pay for the company. A couple reasons why there. Number one, it's taken forever for the deal to close, like a year, maybe more, from the time that it was announced. And then there's a lot of concern that regulators, not just U.S. regulators, these are two international businesses, regulators in Europe and other places, they might nix the deal, right? So obviously with the Store Capital deal, the market's pretty convinced that a deal is going to happen. So you notice I didn't say the deal, I said a deal. Something else that's pretty typical of this sort of deal is there's what's called a go shop provision. What that means is that the board of directors of Store Capital have a fiduciary responsibility to you and me as shareholders of this company to act in our best interest. So now they're going to take this opportunity and they're going to go out and they're going to find other potential buyers of the company. I was talking to my good friend and colleague, Matt Frankel. Matt has a great YouTube channel. I encourage you to check that out. Matt pointed out that there is a decent chance that we could see other bidders come in and raise the price that's being offered for Store Capital. So number one, that's happening. That's a real possibility that we as shareholders of Store Capital could end up getting more than that $32.25 from another bidder. If they offer a price that's higher than GIC and Oak Street are willing to pay, GIC and Oak Street might step up and raise their price that they're willing to pay. So those things are going on, right? Now, why is that the case with Store Capital? So it's, I think, three reasons why. Number one, Store Capital has some wonderful assets. Single tenant operational real estate. That's what STORE stands for in this case. And these are largely standalone retail locations, and they're very e-commerce resistant. Stuff like hair salons and restaurants and experiential relationships, things that e-commerce can't really replace or that people want to go to anyway. So there's a high quality assets. The tenants behind them that do business with Store Capital are some very high quality businesses. It's very, very well run. And there's also a massive tailwind behind private equity acquiring publicly traded REITs over the past year or so. So these are assets that are very, very appealing to private equity right now. So for all of those reasons, we could see another bid come in. We could see a price war. As an existing shareholder, I don't love it. I want to own this company for the next 20 years, but the reality is that's not gonna happen. So I'm going to sit on my hands and let this play out. And I would encourage most other investors in the company to do the same thing. Just let it play out and let's see what happens next.